Welcome to Commodities, and all markets have turned lower, including gold that we're looking at here on the daily chart, and we were expecting it anyway, and now it's trading under the 1300. So we're looking at this B wave here being completed and a move down here further. Normally this move down here would be basically the same size to this one here, so we could end up at 1200 here. I just know there's a lot of support around here, so starting at the 1250, so I've just kept it at the 1250 because it's going to be some strong bounces coming in from there. Markets can move quite quick between these two numbers here, as you can see here. Once it's rejected the 1280. Just drilling into that a little bit. So we're looking at this particular triangle pattern through here. We thought there may have been another little move up through here. That's not the case. So we need to bring that little B wave here into that little position just there. But besides that, the rest of the triangle here is in good form. And yeah, look, technically we'd want to see, for confirmation rather, we need to see this low here taken out. That a move through that 1290 there would give us, well, it would tell us that this move up through here is actually in three waves, because when you think about it, this move up through here could be wave 1 of 1 degree, and then the next degree smaller, this could be wave 1 here of the next degree smaller. But if it took out that low there, then it cancels out that degree, and the same as the move below the 1280 or this particular low here, that will take out another degree of structure as well. But as it stands, we'll run with the Elliott count that we have, and yeah, let's just drill in here a little bit further. But basically from this high here, we'll be looking for 1, 2, 3, 4, and 5 down through to here as wave 1 here, and then a counter trend in 3 waves for wave 2, pulling back up 50-60% of the move down through to here. But we may see a retest higher in there. Let's drill in there. It's a bit tricky to see. We can see so far that with the market falling through here, we can see that it's retested, retested supply, retested the 1300 where the orders will be sitting. And so it's basically been rejected. So we should see a move further down. In terms of moving into this market here, if you're not in there already, then the 1295 as a retested resistance, or even the 1292 as a retested resistance is normally, which is the pivot within group 1, is normally a good sign that the market will be pulled down into the 1290 at that point. So there are plenty of scaling in points that you could use from the 1290 back up through here as well. However, in the safer picture, the 1290 as the resistance, then that would also confirm that the little B wave, from the B wave here moved up here, then that would confirm that that we're in a bearish mode as such. And yeah, there'll be a bounce off 80, of course, coming back to 90, rechecking the supplies through here. And you need to find ways to get in. You either short the retests or wait for resistance. But essentially the main points here are the 90, the 80, and the 72 here as resistance to add to positions for a longer term trade to the downside, if that's going to be the case. The stop would be put at, above this high here. 307 would do the trick for the time being, just in case there's another retest of some supply coming through here. And that supply really would be, there's levels in terms of price which need to be taken into consideration, but you just got to kind of see how the sellers orders will be moving down. This is a reflection of those orders moving down in that sort of degree here. So yeah, anyway, we'll see how that goes. The silver market as well, we're looking, we did a bit of a trade to the long side up here, but exiting into this area through here, it's sort of retested the major level here. Main point here, is that this move here is currently in 3 waves. Now, it would only be 3 waves if this low here was taken out. So normally within group 1 here, the 1, 2, and 3, if the 2 here becomes the resistance, then I know that it'll be pulled down to the 1900 at that stage. The other point here, if it breaks through the trend line here, it can come back up and use that trend line here as resistance and then fail from that point here. But the other side of the coin too is, in terms of a bearish market, would be looking for 5 waves down. Currently we only have like 3 waves down, so you know, we're sort of in the third at the moment, so we'll need to see the fourth and the fifth. If we see 1, 2, 3, 4, 5, and then 1, 2, 3, then we can short it from that point there, which would be even safer still. Because as it stands, this can be up for 1 degree and back for wave 2, then this can be another degree of structure to the upside. So yes, we're looking at it as an A and a B and a C and failing at the retest here, but we just need evidence, and there's different ways of getting evidence, and you know, it's not quite, we don't have that evidence yet as such, so it's probably forthcoming, and yeah, we just need to set up. So look, just going over this here, and this will be the same for many stocks, is looking for basically a 5-wave structure down, then a 3-wave structure back. This 5 waves here will tell us that we're going to get another 5. That's the important bit here. So yeah, like all markets, most markets are turning, and copper is another one as well. This is the daily chart here, and what I wanted to see here was I wanted to see this low here get taken out by a move up through here. It hasn't occurred yet. This is the 50% retracement level, and the top of the circle is the 61.8. That's from this high here down to here. So it's quite fitting that it could fail from here. Essentially, you know, I wanted to see a nice move through the 320 here to confirm that we're actually in a bullish market here as such. And I think one of the other things to consider as well is many people use the CBR index for commodities, but this is the UBS commodity index. Not that there's a lot of difference in it all. But, you know, we have looked at this from time to time, and just wanted to sort of point out where we are up to a little bit here as such. So I was always aware that, you know, that we had this move down through here, which was an A and a B and a C wave coming through here. And I knew it was a C wave because this wasn't sharp enough to be a third wave coming down. It was on more of an angle than this one here, and it counted all of these waves, all of these waves. So we pegged the bottom in here, and then we're looking for a structure to the upside. And, you know, at times using Elliott, there's times where you can say, this is definitely going to happen here, and other times where, well, I guess it gets a little bit iffy. So from this low here, I noted 5 waves up here, and we knew that there would be, a correction. It was a bit scary. It came quite low here, but that 5 waves would produce another 5 waves. So essentially, we knew that we'd be making new sort of highs above here. What we have so far up here is this is basically 5 waves up through here. We've got a little 5 in here, and then we've got another little 5 from this point here extending out into a third wave, and then we've got this little 5 here. So in a bit of a nutshell, we've got this whole structure here as 5 waves up here, and we've also got this one here, okay, as 5 waves. So in a bit of a nutshell, this is actually like a 3-wave structure up here, so that makes it corrective so far, okay? I mean, I would expect this market to give us another thingy bob here, a correction here of a wave 4 coming back to the wave 4 of 1 lesser degree, and then once that's completed, we'll see another wave up through to the 140 area up through here, but that would actually then give us 5 waves up through here, okay? So that's what would be sort of, that's the aim that we're looking for here. And the reason I'm going over this for is the simple fact that with grains, because this index here is a basket of commodities, so it's got gold in there, it's got grains in there, and so forth. So we know that wheat and corn and soybeans are all correcting, and they have moved swiftly overnight to the downside, and it's part of the corrective pattern that we've been following as such. And so, this is going to be another way, this index will be another way that we can look at the basket of commodities correcting. So, yeah, look, and this could take some time. This could take it could take 2 weeks or so to pan out, because wave 4s can be a bit complicated. But that's kind of where we are in the cycle. So, you can do some shorting in these markets, but be aware that any shorting that we're looking at is corrective as such. And then we'll look for this run up here. This would be the one that we'll be looking for to build into on the long side. Okay, with that in mind, copper can correct, copper can follow precious metals, so it could turn down from here. What we were looking at, and still possible, is that, you know, it's not that the copper market's sort of damaged or anything, but we're looking at this in terms of wave 1 to here, wave 2 to here, looking at 5 waves up here for wave 3, and then wave 4, 38.2 retracement for copper. This is important for BHP and so forth, but comes in at 311, so we can expect this to come down. And what we have been looking for is a move to 315, and then the classic trading levels pattern, which would be the reaction, the support, and then the first high above the level, and then the corrective pattern. And then what we do is we look for support on the 315 to go long. Now, sure, that can all fit into an Elliott count, but the reason that I put that classic trading levels pattern together is simply because it's a very simple way to understand a pattern without having to understand Elliott at the same time, which can be a bit of a doozy. So let's just see how that pans out. But on the intraday here, this is how it's sort of panning out. So 315, which is the midpoint, halfway between 10 and 20 up here. So the arrival, the reaction, the support, the first high above the level, which we never try to trade or catch, and then the A, B, and C here. I say at 38.2 retracement level can bring it back to 311, or the fourth wave of one lesser degree, which I find more accurate. But anyway, some sort of 3-wave pattern here, and then support on top of the 315 would see further upside there. And US BHP is also important in this mix as well, and that's working across the number 72. So the people that know that what that sort of means, it would be worthwhile keeping an eye to see if US BHP accepts or rejects that number 72, that level there. But it's only in its first swing across, so it needs time. Right, the oil market. You know, once again, I was expecting, well, let's just go back over a little bit. We, first of all, we were looking for 61.8 retracement level around the 102.50. That's come in quite sort of nicely here. There is still a bit of a wave count here that could take this up to 103 and 103.30. Here, the sharp move overnight sort of put a bit of a damper on that situation, but it hasn't overlapped with this wave 1 structure here, the top here. Yeah, so it could still push up here and make another wave up through here. So I just want to be a little bit mindful about that. So with the 101 as a retested resistance, then we know that this corrective pattern here is completed because it's got overlapping wave structures with wave 1 here. And then we could glean a small position here. It's got to be small because we're trading short above the closest largest number, which is very high risk. So gleaning a small position here, and then looking to build the position under the 100 and 99 and 98. That will be bounce off 98 and so forth. But we're expecting, you know, a larger move down through here. So it could be a very nice short trade from here. But we just need to be a little bit mindful of this move currently coming down here, still as an ABC for wave 4 here, and then moving up to 103. So I suggest just chilling out and wait for it to fall into place a little, you know, get confirmation on it. But I'll leave that up to you. The gas market. Okay, so we were looking for a bounce off the 430, and we certainly got it. It just popped straight back up. I did make an error. I had the 38.2 retracement level at 440, which was incorrect. It's actually 450, so everything's on track here as well. The daily is still deeply oversold, so we could actually get a move much higher from here. So in terms of that, look, if the 450 became a nice support, you could trade it to 460 or 465 where the supply is, and exit at that point there. So I won't go much beyond that at this stage. Let's just, it's a bit hard to read this spike here as well, so on the intraday, so I won't go into that, but it's done what we expected, and I just want to sort of observe it in line with, you know, a whole lot of other markets as well. But it is deeply oversold. I don't know if we'll trip out on that on the lows there and continue lower and cascade sort of lower, which is possible. Let's just see how we go. all the grains. Okay, so the grains are correcting mostly. Coffee's not, but sugar's not. But soybean, wheat, and corn, the mainstays there. Look, it's the same story. I don't know what type of correction is going to come out of the gate at the 1500 here. I knew it would, expecting it would, and it is, and it's still unfolding. We could be halfway through and all these sorts of things. But until that 1500 becomes the support, we wouldn't be trading long unless I can see a very mature corrective pattern that I understand, and that would be, if this was correct, then if I got the wave count correct, then we should actually see a wave fall back to the 1350 here. But anywhere between the 1400 and the 1350 here is a likely place for its previous support here. I mean, what markets do, you can see that the market's quite quick through here. So if a market moves down, it comes down to where the volume was traded before, then retests the supply back up there. If it chips away at this level here, these people, then it'll just drop down to the next lot. That's all it does. It just mirror images the volume. So look, let's just see how it goes. We know that on the intraday here that and I don't have it here as well. I've got two alternate counts here. This is why I'm just not quite sure about how it's sort of unfolding. But group 2 here is important. So 1480, 1472 and 1465. If this market finds the 1465 as the resistance, then we know that it's out of group 2 here, and then we'll see the midpoint here tested again, which is the 1450. If the 1450 becomes the retested resistance, which is likely, then we'll see further downside from that point there as well. Any trading shorts here would just have to have the stop above the 1480 at this stage. It's not something I'm going to call in or anything of that nature, because I didn't want to get into trading commodities through the corrections unless it's going to be a reasonable sort of move. The wheat market. Okay, so this is what we were looking at yesterday, and it's moved down, reasonably well. And we can see that the support here, so there's going to be support coming into, the 665 sort of area through here. This line through here is the medium level. It's just the medium level at 650. Not that it's sort of showing up on the radar there as being much at all, but we'll give it time. And also too, from the high up here, we need to count 5 waves down through to here, and then 3 waves back up, and then another 5 down through to here. So, in line with the commodity index, this would be, pretty much sort of spot on, really. So, look, we're in a corrective phase, and we can start counting 5 waves down through here, which we already have. It's probably not quite right, actually, here, but don't pay too much attention to it. But coming into this area here, there's going to be support in here as such. I need to pull this apart because it does look like the 3rd wave to here, the 4th wave and the 5th wave, and it could end just here on the 672 here. The market is deeply oversold, or moving into position of being oversold, so we can expect to sort of bounce back. So, basically lining this up with other markets, we just really want to, it's really good that I'm seeing this correction, because it will just give us a really good buying opportunity when the time is right. The tricky bit is to not lose money in the markets by taking short little trades here and there that sort of chip away at the situation. So anyway, nothing to do as such. The corn market is the same as well, and slightly different sort of count here, but the main point here is that from the 520 here we start counting 5 waves down, and that would be down for 1 and back for 2 here as we had it, and then 1, 2, 3, 4, 5. So wave 3 will come down into the 470 area here, and then wave 4 and then wave 5 down through to here. This market has been in a larger corrective pattern from here. I may have to change this to have wave 1 over here, and this would be the A wave, the B wave, the C wave for wave 4 here, and then wave 5 up to here. But I'll need to go and do some homework on that. I'm not too concerned about it at the moment. If this market ever came back and sat on the 500 here, then we'll be scaling in through this direction through here. The main point here is that we want to see a nice big correction across the 500 here, and the bigger the correction, the bigger the next trend is going to be. So it's just currently just taking out all the stops for all the other long traders that haven't exited, you know, in this market. And once all that's done and that's all dried up, well, then we'll see this market move higher. Okay, the coffee market, we were also looking for a bounce off the 180, and that's come in sharp as well, so that's nice. The move up to here so far, I mean, first of all, this move down through to here, it looks corrective to me. It looks like it's in 3 waves, okay? But still, it's from this high here, it's still a small corrective pattern. So I just want to, you know, I want to see more pattern here. I needed to see it mature much more. The move up here from the bounce up here is from this low here is in 3 waves, so an A and a B and a C wave. In the C wave will be 5 waves, 1, 2, 3, 4 in here and 5 up to here. So we can expect it to fail from this point here. If it does find support on the 200, well, then we'll look at being long from that point. But you know, we want to see it tested properly. So in the interim here, this would simply be, this would just simply be a little 5th wave to here. We'll see a reaction, something like this. And if we do see something, well, it'll be more like this really. If we do see something like this here, you know, we get support there, then we will look at taking, you know, this high out or this high out to go along with a very small position with the aim of adding over here. But let's just see how we go. But as it stands, we should see this fail, move further down. The reason I mentioned this is the daily chart is also oversold as well. So it can be the catalyst to drive it higher. So that's why I've mentioned that. Let's just see how that pans out. Coffee and 2 sugars, please. So this here, yeah, look, yesterday we were taking 50% profit at 18.20 here as top of wave 3. We're in wave 4 now. It does appear to be corrective down through here, so wave 5 can take us up to 18.30. If we did get a solid support on 18.30, then we'd probably buy another position, but it would have to be a nice solid support up there. But the way I see it is that this 5th wave here won't go very far. It will make a new high above here. Could even go higher up here. If we did get a really good support on here, such here, then we'll take out this high once we've got those reference points there. But as it stands, we'd be seeing basically an A and a B and a C wave like this, and then up from that point, and that's what we're looking for. So we're looking at buying this pullback in here as wave 2 here. We may pick up in here. I mean, at the end of the day, if you've got enough sort of space and you haven't overtraded, the idea would be to, you know, to be picking up positions at, you know, 80, 70, 72 and 65 whenever it comes down, you know. Even here would have been fine at 1780. So it depends how you go. So having orders, you know, at any of these numbers here is fine, as long as you can take the heat. Current stop is at 1746, and we'll just leave it there for the time being. Right, the orange juice market, what we were looking to do here, as you know, we were looking to 140, 160, 163. So quite simple. We were looking at being long on 163 support, and that would help confirm that we are going to the upside. Otherwise, we'll be looking to short at 160, and that's the case. So if you're short, then hold short, and we're looking down at 150 here. So now I also want to point out here that in this particular case, we could actually have a larger bear market unfolding. So what I've done here is that I've called this down for either wave A or wave 1, wave B or wave 2 here, and then we've got wave 3 or C happening here, which will be in 5 waves, which will be the 1, the 2, the 3, the 4 and the 5 here. If it's a 3rd wave, it will move quite rapidly, which it basically is. So, you know, we may end up getting a much larger pattern to the downside, because I know in the bigger picture the orange juice is in a huge corrective rally, but I was looking at 172 for the for the high to come in, and we're only got up to 168. So, but this is quite a big correction that's occurring here. So, you know, what is now that it hasn't found support here. But as you know, I thought it was corrective because we only had this 3-wave structure here, and we'd still only have 3-wave structure to here unless we had support on the 163, which would have created a little high above here, which would have basically put this into a bullish pattern, but that's not the case. So look, exit longs down at 150 because it will only get messy and bouncy, even 150, 152 there. Okay, that's it. Okay, thanks for listening.